Return on equity is one of the metrics that investors use to see how their money is working for them. Return on equity is the net cash flow divided by the amount of equity after accounting for appreciation and principal reduction. To calculate return on equity, simply take the annual net cash flow to the investor divided by the amount of equity in the property. Typically, if a property is appreciating and the investor is paying down principal on their mortgage, the return on equity number annualized tends to go down. And that's because appreciation is pretty significant. Principal paydown can also be quite significant. Net cash flow is usually not growing at nearly the same rate. At some point, investors will see that their return on equity number has gotten below a threshold to which they're comfortable, and they will take that trapped equity through either the sale or refinance of the property and then reinvest it so that they can bring their return on equity numbers back up to an acceptable level.